It's Friday, 6 p.m., long week's done. Somebody in your house decides you're picking up dinner instead of cooking. Sensible call. You pull into the parking lot, walk up to the ATM, and tap your card. Nothing. Try again. Error. Drive to the next branch. Out of service bag on the slot. Third ATM in a row. Same result. Your kids are in the back seat. The fridge at home is thin because you were going to grocery shop tomorrow. And right now, in this parking lot, you realize you're looking at $11 in your wallet. This is not a scene from a financial collapse documentary. This is a Friday evening in 2024, and it happened to real families across North America. Not because of a bank run, not because of anything conspiratorial, because a software update went sideways. Here's what we're building today. 3 documented reasons ATMs actually go offline. The specific denomination math that separates a usable cash reserve from a stack of paper no one will break. The payment failure cascade, what still works in exactly what order. A simple 3-account structure most financial planners don't teach. And your 5-step family cash plan B, ready to implement this weekend. If you watched part 1 of this series on how much emergency cash is actually smart to keep at home, this is where that number comes into play. The link is in the end screen. I'm Ernie. This is Prepared, Not Paranoid. Let's build the plan. In over 20 years of building business continuity plans for Fortune 500 companies and hospital systems, I've cataloged 3 categories of infrastructure failure that reliably take ATMs offline. Not in a theoretical way, I'm trying in a your branch is dark and your debit card is a laminated rectangle kind of way. Because 1, power grid failure. This is the most common cause, and the trend is moving in the wrong direction. According to the U.S. Energy Information Administration, major event outages in 2024 averaged nearly 9 hours per customer, more than double the 10-year average from the prior decade. In South Carolina, Hurricane Helene left customers without power for an average of approximately 53 hours. ATMs run on power. Most have battery backup, a few hours at best before they lock down for security reasons or go dark entirely. If your grid is out for 24 to 72 hours, ATM access goes with it. 2, telecom and network failure. The silent cause most people miss. The lights are on. The bank building is open. The ATM screen is lit, but nothing processes. Every ATM transaction requires a real-time network handshake, authentication, account verification, funds authorization, and dispense instruction. When the carrier goes down, the machine can't complete that loop. It looks functional. It is not. The most instructive recent example, in July 2022, a single carrier outage in Canada took down ATM's debit card processing and the entire national payment network simultaneously. Stores went cash only within hours. People lined up at ATMs that displayed no error but dispensed nothing. 1 telecom failure. Over 12 million users offline. An entire payment network dark. The same infrastructure dependency exists in every country with centralized payment processing. 3, bank-side IT failure. This one became impossible to ignore in July 2024. When a faulty software update caused a global IT crash, banking institutions were among the hardest hit. ATM services, mobile apps, online banking, and call centers were disrupted at multiple major banks simultaneously. The outage was resolved within hours to days, but for households with no cash at home, even a 4-hour window without access to their own money was a real problem. The pattern: power can fail, telecom can fail, bank IT can fail. A mature business continuity plan never assumes any single dependency will hold. It builds redundancy for the most critical one. Here, that means physical cash, at home, accessible, in denominations that actually work. If you watched part 1 of this series, you already have your household baseline number. If not, here's the fast version of the 72-hour math. Start with your household's essential daily spend. Groceries, fuel, medications, and any utility payments you might need to make in person if digital payments are down. Leave out subscriptions and anything that can wait. For most households of 2 to 4 people, The essential daily figure is between $75 and $150, but your number depends on your household and geography. Multiply by 3 days. FEMA's Ready.gov Financial Preparedness Guidance specifically recommends keeping cash on hand when ATMs and credit cards may be unavailable during a disaster, with its overall framework targeting a minimum 72-hour window. Their Emergency Financial First Aid Kit recommends storing enough cash to cover household expenses for a few days immediately following an emergency. So, daily essential spending times 3. Then add approximately 25 to 30% as a buffer for price increases at cash-only vendors, for the cash premium some small businesses charge when cards are down, and for the unexpected item. For a household spending around $100 per essential day, the 72-hour target lands roughly in the $375 to $500 range. 2 important framing notes. This is not your emergency fund. Your emergency fund lives in a savings account and covers months of expenses. This is your operational float, the household equivalent of generator fuel, not replacing the grid, buying you time until the grid comes back. If this kind of practical, no-drama preparedness framing is useful to you, hit subscribe. 1 video a week, no apocalypse required. This is the section most people have never thought about, and it is the single highest value insight in this video, so stay with me. When people decide to keep emergency cash at home, they typically do one of 2 things. They go to the ATM and take out whatever comes out, usually 20s. Or they go to the bank and ask for larger bills because it feels more secure. A stack of hundreds feels like serious money. Here's the problem with that instinct. Ready.gov says it directly. Keeping small bills on hand is important because ATMs and credit cards may not work during a disaster when you need to purchase supplies, fuel, or food. That language is deliberate. The guidance isn't just about having cash. It's about having cash that works in the environment you'll actually use it in. Consider the vendor's position. A gas station running on a generator during a power outage. Their register may or may not have power. Their card machine almost certainly doesn't. They're making change from a till that started the day with whatever was in the drawer. A $100 bill is a liability. They likely can't make change, and their counterfeit detection equipment is probably unplugged. Multiple sources on financial preparedness confirm the same principle. Avoid large bills because stores may not have change during a disruption. The recommended denomination mix, predominantly $20 and 10s, a meaningful number of 5s, and a supply of 1s. Think of it like building a go bag for your wallet, tools that work in the environment you'll actually be in. If you have emergency cash stored at home right now, go check which denominations you have. If they're mostly 50s and 100s, take them to the bank this week and swap them for smaller denominations. No single preparedness action this month has a higher return for the time it takes. Not everything fails at the same time. Understanding the payment failure cascade helps you use your cash reserve strategically. Here's the general order based on infrastructure dependency. Contactless tap-to-pay fails first. Every transaction requires live network connectivity. No connection, no tap. Chip and EMV transactions fail next. They also require real-time back-end authorization in most configurations. Some merchant terminals have an offline floor limit, but this varies by bank and terminal. Don't count on it at the gas station during an active outage. Magnetic stripe swipe has historically been more resilient because some older merchant systems could batch transactions offline and settle them later. But this is increasingly rare as merchants upgrade to EMV-only terminals. Checks can still work at many grocery chains and pharmacies. Smaller local businesses are often more flexible. Know your account number. Keep your checkbook accessible. Local check cashing services, the kind in strip malls that most of us use before direct deposit became the default, often carry more cash on hand than you'd expect. Know where yours is before you need it. For those of us who came of age in the 80s, these places were on every corner. They're less common now, but still operational in most markets. Cash is the only fully resilient payment method. No infrastructure dependency, no backup system. No, have you tried restarting it? Cash functions when everything else doesn't. The only catch, you can't withdraw cash from an ATM when the ATM is the problem, which means cash at home, before the outage, is the only version of this plan that actually works. Now we get to the structural layer. And this comes directly from corporate financial resilience planning, the same framework I've applied to organizations that cannot afford operational downtime. Translated to your household, 3 functional buckets, no specific banks recommended. This works at any institution. I'm naming functions, not brands. Account 1, operating. Your paycheck hits here. Bills come out of it, your card is connected to it. It is your active use account, which also makes it your most exposed account to fraud, system outages, and the daily risks of a high-velocity account. Keep it working, just don't keep everything in it. Account 2, reserve. This lives at a different institution than account 1. Different bank, different network infrastructure, different failure mode. If account 1 is at a large national bank, your reserve is held at a regional bank or credit union. When Bank A has a system outage, Bank B may be fully operational. Your reserve should cover 1 to 3 months of essential expenses, and it needs to be tested. Can you transfer from it? Do you know the routing number? Does your spouse have access? For couples in their 50s, that last question is both a continuity question and an estate planning question. Coordinated access and named beneficiaries are not just convenience features, they're continuity architecture. If you haven't walked through this with your partner, then this weekend's project is to do so. Account 3, crisis, not a bank account. This is your physical cash reserve, the $375 to $500 kept in a fireproof, waterproof container at home in the right denominations. It earns no interest. It is not invested. It is your generator fuel, stored, maintained, rotated annually, and ready when the others go dark. FEMA's Emergency Financial First Aid Kit puts it plainly. Store enough cash to cover household expenses for a few days immediately after an emergency, in case banks are affected as well. 3 accounts, 3 separate failure modes. 1 household that doesn't get caught with $11 in a parking lot on a Friday evening because the network went sideways. Coming up in this series, the reserve account setup in detail, specifically the right amount for households approaching retirement and how to coordinate it with a spouse without turning it into a whole financial event. The link goes live when that video is published. I'll drop it in the end screen and the pinned comment. Here's your family cash plan B. 5 steps. Weekend executable. Step 1. Know why ATMs fail. Power, telecom, bank, IT. 3 categories, 1 household vulnerability. You're not preparing for collapse, you're preparing for infrastructure. Step 2. Calculate your 72-hour number. Essential daily household spending times 3 plus a 25% buffer. For most households, that lands between $375 and $500. Write the number down. Step 3. Fix your denominations. Primarily $20 and 10s, include 5s, have 1s. If your current reserve is mostly large bills, swap them this week. That's a 15-minute bank trip with a meaningful return. Step 4. Know the payment failure cascade. Contactless fails first. Cash is the last standing. Local businesses go cash only within hours during an active outage. Be the household that has cash when that happens. Step 5. Build a 3-account structure. Operating account. Reserve account at a different institution. Physical cash reserve at home. 3 failure modes. 1 plan. Your homework right now? Go count what's in your wallet. Whatever that number is, that's your current plan B. If it's a problem, video 2 in this series builds your full cash baseline from scratch. Links in the description. I'm Ernie. This is Prepared Not Paranoid. Build the plan, skip the panic, grab the free household audit, link below.